Okay, guys, welcome to the final video for the Facetex course. This one might be a bit long, but this is basically putting everything that I just taught you in a nutshell and showing you how you dress up a naked chart and how you go from A all the way to Z, from marking up your charts all the way to the analysis to the entry, right? So here we go. As you can see, I'm on the monthly time frame. Please take note, top left, monthly time frame. Do not do your monthly key levels on the daily time frame. It's a common mistake. Make sure you're on the monthly time frame. The first thing we want to do is look for a monthly key level, right? So what we do is start on the monthly and let's look in the area no more than 12 to 18 months back, right? Look in the 12-month region. You don't want to look back over here at 2007 and find resistance and support. That will all come naturally once you find the respected levels over here, right? So what you do is this is the 2nd of Jan, 1st of Feb 2017. We're currently June 2018, so that's a bit too far back. So let's work from June to June, okay? Somewhere over here. Then you take your crosshair, you move it all the way down, and all you're looking for is an area where the wicks have touched 3 or more times. Obviously, if you find the area where there's 5, 6 wick touches, you'd rather want to go with that first. So as you can see, we're now approaching a couple of wicks. We're coming down, we're coming down, we're coming down, coming down some more. Here we go. We have, boom. As you can see, we're touching 1, 2, 3, 4, 5, 6, 7 weeks. So I love this area. Right now, I did show you in the previous video your psychological round numbers where you need to round off your key levels. Now, the last 3 digits, as you can see over there, sorry, it was 114006. Let me just get out my horizontal line. It was 114006 over there. Okay, make sure your monthly key level line is black. Something like that. Cool. So now we have 114006. The last 3 decimal points, you either want to round off to 000, 250, 500, or 750, or the closest thousand. Now, because we found that area over there of 114006, we're now going to double click, format, and obviously we're going to round it off to 114000. Okay? Then you say, okay, make sure you lock him in. So now I can't move it. It's stuck there. So now we carry on further and now we look again. Where can we find another level? Move, move, move. Look for the most weak touches. And over here we see, what's this? Like 1, there. 1, 2, 3, 4, 5, 6, 7, 8 weak touches at 110011. So 110011, we want to obviously round off to 110.000. Say okay, and then we lock it in. Once it's locked in, guys, very important, the only 2 levels that you will need to use your eyes and a little bit of skill is your first 2 monthly key levels, right? You saw how I did it. So the next step, once you have your first 2, look at the pip difference between 110 and 114. That's a 400 pip difference. So it's very easy to find the next support and the next resistance level because now I just know it's 400 pips apart. Okay. Remember, you never want to have your monthly key levels 1,000 pips or more than 1,000 pips apart. You want to have it like between 400 to 500 pips plus maybe 700, 800 pips apart, all depending on where you found those weak touches. Okay. So next step is just plot some more monthly key levels. So the difference is 400 pips, which means the next one will be 106. So let's format this quickly. So 106.000. Look how nicely it sits there on that 3-pin bar without even looking, just using the psychological numbers. The psychological numbers are crazy, guys. Understand? It's like magic. Let me just forgot to lock my line in. Then above 114 we'll have 118. So we format that. Again, look how nicely we're touching the weeks. Okay, cool. So all our levels are locked. Okay. Now understand, guys, you can go further and draw 121, 125, 129, and then below 102. You're more than welcome to do that. I'm just doing this for demonstration purposes, so we don't keep this video running too long, but show you how you break it all down. So once your monthly levels are set up, you want to just format, and you want to actually call it a monthly key level. So in caps, I like to type it like this: monthly key level. Text should be on the right, on the top. Okay. Okay, once that's all done, I like to use this rectangle tool and draw a nice strip around it like that. Don't want it to be too dark. That's fine, it's light enough. Okay, then on a MacBook, you just hold Command. Sorry, not Command. I think you hold Control. Yeah, Control, just to clone it. No. This just makes your charts look sexy, guys. And they're just dressing it all up. The charts look sexy, you make money. Promise you that. Okay, one more. Cool. So now that's all done. Now we want to draw the weekly level. So we'll now step down to the weekly time frame. When we're on the weekly, you saw a video obviously on how we did this. So just gonna do it quickly with a fib. Take the fib from monthly to monthly. So 108 is our weekly level. So you place it on the 50% like that. Please, guys, if you use utmost precision when placing these levels. You don't want to rush this. Understand it's not something that needs to be done every week. That should do every few months. And then we want to make it red. And we want to just call it weekly and set the text to the left. And just say weekly level. You're going to pick your fib up, drag it. See how I make my 100 and my 0 basically line up with the monthly levels like this. Cool, so the 50. Guys, please stretch your charts if you can't see clearly. So the 50 is now at 111,985. So we'll place him just there. And again, we'll say weekly level. Lock it in. Don't forget to lock them, guys. Please. 115. Perfect. Awesome. So there's our weekly levels locked in, locked and loaded. And that took us about 5 or 10 minutes. But now we have perfectly marked up monthly levels, nice weekly key levels. So now we step down to the daily time frame. Now, when looking at the daily time frame, again, the same rules apply that you do on the monthly. You look for an area where there was resistance or support, and you look for 3 weeks or so. if it's really close to a weekly key level, like let's say on this daily right now, if I were to draw a daily level here using the horizontal ray like that, sorry guys, remove horizontal ray. I would draw it like that, you see, because it's touching 1, 2, 3, 4, 5 weeks. If let's say this area of support was like this, it wouldn't make sense to draw your daily key level so close to your weekly because there's already a key level, weekly key level here. But this is slightly further away from that monthly, or sorry, from that weekly. So we can draw it over here, right? So now we found a daily level, weekly level, and just looking at the daily level, because my eyes already adapt to these patterns, it's quite simple that we can see we have a head and shoulders pattern going on here, right? So we have the left shoulder, right shoulder, perfect head and shoulders pattern. Okay. What else can we see? Let's draw a trend line. So let's grab our trend line here from the base. Remember week to week. Why is this line so thick? Make it thin. Don't have your trend lines thick, guys. Have it thin. So week to week, like that. Okay. You want precision, guys. You want precision when it comes to your trend lines. So there we go, week to week, one touch, two touch. We got the head and shoulders pattern, right? That's showing us price pushing to the downside. But we had the strong, let me zoom in over here. We had this strong daily candle closure yesterday. Let me just delete that. We now know that's a head and shoulders pattern we spot. So, I was expecting downside momentum. But because yesterday's candle closure, if you look very closely, it closed above that monthly key level. That's why these monthly key levels, guys, are so important, because if this key level was not marked up on your chart, you would not even know that the daily key level just was broken by yesterday's daily closure. But because we have these key levels and we know how to use them, it's an advantage, because for the past week I've been bearish on UJ. But seeing that we broke the monthly key level, which is a strong area, and now the current daily candle looks like it's testing it. Um, my bias, I feel, is now long, right? Um, Remember, we haven't touched the 4 hour time frame yet. So if you're trading the daily time frame, then you would take your fibs and you would, and I'm talking about this is swing trades, because if you trade on the daily time frame, you take profit like every few weeks and you draw your fibs from A to B, like that, right? Um, Here's a 61.8 retrace, but we're respecting the trend line. So whenever we're this side of the trend line, you want to make sure that when you're on this side, you're looking for buys. When you're on this side of the daily time frame, you're looking for sells. You don't want to buy on this side of the trend line. You want to buy, you want to buy on this side of the trend line over here, and you want to sell on this side. So we have a head and shoulders pattern indicating price could move down, but we have an ascending trend line that's showing price to the upside. So if we zoom out a bit like this, let's take a trend line all the way from back here. Let's take a trend line from the top here, touch it on there, like that. Okay, so remember, whenever you draw your trend lines, you draw it from A to B and into the future. Okay, so we've broke out of this trend line before. We've came back, bounced on the ascending trend line, and now we sitting again currently above the descending trend line. Okay, so with your trend lines all intact, leaving that there, you maybe want to delete your fib. Step down to the H4 and see what do we see on the H4. So on the H4, okay, what do we see on the H4? Let's see. So let's do it like this. Now on the H4, we're looking rather bullish, taking our sorry guys, I'm very funny when it comes to my trend lines. I want to draw them with perfection. So look at this. We had let me delete this daily one just so I can show you clearly. So we had the 1.1 to 0.2. We had the third bounce, and price is now pushing up. And if we had our fibs out, we would have seen that we had a 50% retrace pushing now to the upside, with targets basically showing at, or TP2 showing at 111,400. What you want to do to clarify complete trend is please do this. Your indicators, add them onto your chart. So you'll type in moving average. The first one you want to take is your moving average exponential, known as your EMA. See there, it's showing your top left, and then your SMA, your normal moving average. Go to the settings of the EMA, change it to the dark blue. Your inputs would be 8, and then on this EMA, this would be a red one, and the inputs would be 18, and it would be red. Okay, so we can see that we had the break above with a bullish candle on the 4-hour above the blue EMA. EMA is crossed over. The red is below the blue. Currently, price is respecting the blue EMA. So I do feel that what's the day? Today is the 12th of June. Let's see if this plays out by the time you watch this video, and we actually get the push all the way from this EMA forming the double top. We will most likely probably then get our selling opportunity. So never get married to a position. My bias on this pair was bearish until yesterday's closure that closed above this monthly key level, also breaking this descending trend line, currently respecting price, respecting the 8 EMA. So your EMAs are crucial when using them, guys, especially for price action. It shows you a lot. It shows you when to get in, when to get out, and just a break above the blue EMA was this morning at 3 o'clock. No, that was yesterday morning, 3 o'clock. No wonder I didn't see it. I was sleeping. So yeah, the EMA strategy works really nice. If you're looking at everything, your trend lines, your Fibonacci, looking for the ABCD pattern, and overall we can see. I'm 90% sure that UJ will push up to the 111.10 or 111,400, but let's aim for 110,750 first before we then push up to 111,400. So yeah, guys, that's how you put everything together the Festex way. Use everything that you know. Use your EMAs. Use your trend lines. Use your Fibonacci. Head and shoulders pattern that I spotted, that's charting patterns. And then also for your entries, use the Japanese candlesticks, which I taught you. Your charts will stay clean and sexy. You'll get nice price action entries. And now you know how I trade. Now you know how I see the market. The secret is out there. It's nothing crazy. I mean, in the previous video, I showed you the power of the trend line, the third bounce power, and also the break and the retest when you're short. And I mean, this over here, I should have spotted this careless of me to not have seen this third bounce and actually enter my long position once we broke above the ATMA. Now you guys can play around, do some back testing yourself, take the strategies I've taught you and apply it on lower time frames. Apply it on the 2 hour, the 1 hour. See if you can perfect the art of price action. I use higher time frames because I don't like checking my phone every few minutes. I like to catch the full move. I don't like catching 40 pips. I like to catch 150, 160, 180 pips. That's why I trade on the higher time frames, such as the daily and the 4 hour. But my strategy does work on the lower time frames, especially the video that you will see in bonus content called the EMA strategy. It works like a bomb, and you can apply it not only to cryptocurrency but also to your normal pairs like fiat USD, JPY, Euro USD, and it's very powerful. So, guys, that is me, Clint. I'm out. Thank you so much for buying this course. I hope you guys enjoy it and you have access to this course for the rest of your life, so you can watch and listen to me over and over and over. And I'm so happy that you guys chose to be a part of my course, because now you go into the markets fresh. If it's your first time, if not, and you lost before, understand, I know where you come from. But if you're brand new to Forex, so glad you came across me, because now I saved you a lot of heartache, a lot of pain, and you'll be a successful, profitable trader sooner than you think. So, guys, have an awesome day, and I'll see you guys on the next video. Peace.